That trade is a great way to wrap up a wild trading week. Joining us now are Trader Gamers, Alan Knuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business Network News contributor. Round one, what's better, to be lucky or wise when it comes to investing? For the record, I don't believe in luck, but I do believe Warren Buffett is an amazing investor and he knows when to get in and out.
It is never a bad thing to sell at the highs, sell into strength. He's done that over and over, and he's taken that money and he's put it into treasury bills, which are giving you 5%. So he's getting 5% on billions and billions. His cash stash is bigger than the FTSE 100 index in the UK. So he's got a lot of cash that he's going to put to work. He's been waiting for an opportunity. So I think it's a combination of wise in the fact that he's seen this before, and selling his strength is a strategy that I use every week on this show.
Yes, and that's something that I said, I'm a big believer in NVIDIA. And when we got some bad news, it looked a little rocky. I didn't sell the whole position, but I did take off half the position because I saw some concerns. But that doesn't mean I'm not still bullish on. In fact, I was kidding somebody. I wish I was as young as they were, because this sell-off is giving you the best opportunity to buy stocks. And I think you're seeing a readjustment. If you look at the stock market over the last couple of years, it was all about the Magnificent Seven. What that means is that there's so many other stocks that are really undervalued compared to that. So this sell-off is going to present a fantastic opportunity to get in.
Very good. Round two, meat madness opportunity. What meat trade do you want to digest?
I want to go hog wild, right? I mean, first of all, we had cattle all-time record highs, right? And it isn't going up necessarily because of inflation. It's because, we got rid of the cattle herd for a lot of years, and that's swifted over. High prices cure low prices. But hogs on the other side, they were kind of the cheap sister. But what you were starting to see is a rotation. It looks like cattle prices, while still near record highs, are leveling off a little bit. But hogs and pork may be the one to ride.
Well, number one, cattle has doubled in price in the last couple of years. So it's in a straight, that is a lower left to upper right chart that you see. And so that's been a straight up move. Now, look at the hogs. I remember when they used to be lean hogs, they used to be live hogs. They used to trade at 25 and 30 cents a pound. So you also have to factor in that we've had a little pullback in some of the grain markets. So if the grain markets get on the move, that could raise the price as well. So there's a lot of potential catalysts in these meat markets. And it's barbecue season, people. Barbecue season is starting soon.
Catalyst. I see what you did there. Round number three, better balance sheet. What do you think the Fed is likely to do with rates at that March meeting?
Well, I think the Fed has been kind of neutered, and there's almost a 0% chance that there's going to be a cut next week. But rates are coming down. You've got mortgage rates at six-month lows. The construction or destruction that we've been seeing in the marketplace has pushed the dollar down and has pushed rates down. That was their goal. It wasn't a conventional way to get there. But the good news is that the Fed balance sheet is come down trillions of dollars in the last couple of years. And so, that has worked. So the Fed has done their job, and we have had until now a soft landing. Yes, we've had this pullback, but 10%. We're down 10% off the all-time highs in 3 weeks, considering the market's still up 150% since COVID, is just a profit-taking pullback. For now, who knows? But for now, that's where we are.
Well, I think the Fed is getting what they want. They're seeing inflation start to come down. We're seeing the most significant drop in inflation we've seen some time. We've actually seen the Fed complain, about fiscal policy, right? About the government spending too much money. We're starting to see that come down a little bit. And so with inflation coming down, we've seen gasoline prices hit the lowest level we've seen in many, many years. So this combination of factor leads me to believe that the Fed is going to have a wide open door to cut interest rates later in the year. Now, a lot of the naysayers a few months ago say, the Fed can't cut rates this year. It's going to be 2026. Now they're saying we could get not one, but maybe 3 interest rate cuts before the end of the year. And that's an amazing turnaround.
Amazing indeed. Here's your St. Patrick's Day bonus round. How much money does the National Retail Federation predict Americans will spend? $7 billion, $5 billion, or $2 billion?
I'm going to say 7 beers. That's what I'm going to spend.
No,
7 beers. However much money that is.
Stop right there, you guys. Our winners, no luck, all skill. And fun fact, much of that money goes to small businesses. Business First AM will be right back.
But look at the Irish, Chef. What can I tell you?